Welcome to this tutorial on how to use eToro Fees, a comprehensive guide that will walk you through the process step by step. eToro is a popular online trading platform that allows users to buy and sell various financial instruments, including stocks, commodities, and cryptocurrencies. Understanding the fees associated with using eToro is crucial to making informed investment decisions. First, it is essential to understand the different types of fees that eToro charges. These include spreads, overnight fees, and withdrawal fees. Spreads refer to the difference between the buy and sell prices of an asset, and they vary depending on the instrument being traded. Overnight fees, on the other hand, are charged when a position is held overnight, and they can be either positive or negative. Withdrawal fees are applied when you withdraw funds from your eToro account. To get started with using eToro Fees, you need to create an account on the platform. This involves providing some basic information, such as your name, email address, and password. Once your account is verified, you can deposit funds and start trading. It is crucial to note that eToro offers a virtual account that allows you to practice trading with fake money, which is an excellent way to get familiar with the platform and its fees. When trading on eToro, it is vital to consider the spreads and overnight fees associated with each instrument. For example, if you are trading EUR/USD, the spread may be 3 pips, which means that you will need to pay 3 pips above the market price when buying and 3 pips below the market price when selling. Overnight fees can also eat into your profits, so it is essential to factor them in when making your trading decisions. To minimize the impact of eToro fees, it is recommended to trade with a long-term perspective, as this can help reduce the effect of spreads and overnight fees. Additionally, it is crucial to use stop-loss orders to limit your potential losses, as this can help prevent significant declines in your account balance. Another best practice is to diversify your portfolio by trading multiple instruments, which can help spread the risk and reduce the impact of fees. In conclusion, using eToro Fees requires a thorough understanding of the different types of fees associated with the platform. By considering the spreads, overnight fees, and withdrawal fees, you can make informed trading decisions and minimize the impact of these fees on your profits. Remember to practice trading with a virtual account, trade with a long-term perspective, and use stop-loss orders to limit your potential losses. With this knowledge, you can use eToro Fees to your advantage and enjoy a successful trading experience.